Good day, ladies and gentlemen. I'll be recording this question on trade receivables control and the list of trade receivables and reconciling the two. Now, it says the following information relates to people traders for April 2005. And it says on the 30th of April 2005, the trade receivables ledger of people traders showed the following trade receivables. So we are given the list of trade receivables below. Now let us just shoot straight to what we are required first, because it is very important to first understand what we are required to do before we go further. Now it says in our requirements that we are required to use the above information in order to prepare the trade receivables control account. This is very important because this is what we are required to do. Then after, we are to show all the entries regarding the correction and or the omissions. Number B, we are to reconcile the total of the list of trade receivables. Remember our list of the trade receivables. This is the list of our trade receivables. Remember that trade receivables are the people that we sold inventory on credit to. So now that becomes the list of debtors in other terms. Debtors are the people who owe us for the inventory that we sold to them on credit or for rendering services to them on credit. But in this case, we have sold inventory to our customers on credit, and they are now the list of trade receivables. Then now, although we are to reconcile the list of trade receivables, it has to be reconciled with the trade receivables control account. So we have the list of trade receivables, and we also have the trade receivables control account. So it is very important for us to understand the two. How are they different, or how are they treated? Now let us just draw the ledger account called trade receivables control. Now we have what is called trade receivables control, where all the trade receivables are recorded. Trade receivables control. Now this is the trade receivables control. Then now we have the list of trade receivables, which is the list of our debtors, which I will draw here. So now we'll have here below the list of our trade receivables. So let me say list of trade receivables. List of trade receivables. Then I will list all the trade receivables as they appear in the list of trade receivables as we have seen given them to us. Now, it is very important for us to understand where are these two related. First of all, this begins in what we call the journals. We have what we call the journals. Under our journals, we have one journal that is called sales journal. Our sales journal normally has a column called date, second column details, but I will not write all the columns that are there in the sales journal. I just want to highlight the very important ones. Then after, there will be a column called sales, there will be a column called cost of sales. Then after this column, there will normally be a column called trade receivables. There will be a column that is called trade receivables. Then after, there will be a column called VAT, which is normally output VAT, but I'm not focusing on VAT. I just want to show you the other columns there that are only related to what I'm doing. And I want to highlight this column, and I want to change the color for trade receivables, because this is the main column that I am focusing on. This is the column that is called trade receivables. This is my main column. Then after, we have another very important journal, which is called cash receipt journal. Cash receipt journal. Remember, these journals are not required. It's not part of the requirement. The reason why I'm doing this, it is because these journals, they link with the reconciliation that I will be doing. Then we'll have again details, then we will have sales, then we'll have cost of sales, COS, cost of sales. Then after, we'll have a column called trade receivables, a column called trade receivables. Then there will be another column called VAT, which is also VAT output, but the very other important column, but not for this question, is the column called bank. It is important because it makes the difference between the two. Now, very important when it comes to these two journals is to understand that in this journal we record only credit sales. That means everything that we sell on credit gets to be recorded in this journal. All the credit sales are recorded here. And under the cash receipt journal, we are recording all the cash sales. That means whenever we sell something for cash, and we receive money, this will be recorded here. And this, we also record here cash received from debtors. That means when the customer is paying us, we receive money in the cash receipt journal. So we have receipt from debtors, meaning receipt from trade receivables. In other words, remember, debtors are trade receivables. So now, how do we begin recording first? Now remember, I said these are the journals, and we have what is called the sales journal, where we are recording everything that is sold on credit, and we record it under the sales journal. That means now whenever we sell inventory, we'll write on the 1st of April, if it's the 1st of April, 1st April 2005, and we say we sold inventory to a customer. Who is the customer that we have? We say, oh, the name of the customer is who? Is Hoop Close Corporation. Then we say, oh, we sold inventory to this customer. Therefore, now we specify the name of the customer whom the inventory was sold to. Then we say, okay, the cost or the selling price of the inventory is 5,000. Cost of sales 2,500. Because we sold it on credit, it must go to our trade receivable column to indicate that this sale was done on credit. It's not done for cash, because when the sale is for cash, it will go to cash receipt journal. So now that this will be how the entry first is recorded. Then let us say we make another sale. Maybe I'm just doing examples, guys, here, so that when I'm explaining the reconciliation, I can link all of that to this. Then we'll say, okay, on the 2nd of April, we make another sale. Again, in the year 2005. We sell another inventory to who? I'm just using random numbers, please bear with me. We sell another inventory to who? To Slot Stationaries. Then we record the name of the customer the inventory was sold to. Slot Stationaries. How much? 10,000. Cost of sales 5,000. Don't worry about the figures, but cost of sales are normally less than the selling price. Then we say, because the customer is owing us the amount we sold the inventory to him for, therefore now under the trade receivables, we are to record the amount of the sales, which in this case will be 10,000. Then now that will become the total. So now here we are going to record the total of 15,000 rands, which is the total of the sales. Now at the end of the period, it could be the end of the month or end of the year, whatever period it is, of which in this case it is the end of the month. Now the total of the trade receivables column, that is from the sales journal, this amount of 15,000 will be transferred on the debit side of the trade receivables control. Take note. So this is the debit side and this is the credit side. And if you look at this, this amount is the total of all the debtors. That is what the control account is all about. You record all the total amounts that are related to this one account, which in this case, everything that has to do with our customers, meaning sales on credit to our customers, gets to be recorded here on the debit side. So this 15,000 will be recorded here, and our contra entry, we are going to say sales because we sold inventory on credit. So now then that will be the first part. The second part, now we are going to say we need to know the individual account for each customer. How much does Hoop CC owes us? That is where now we open a ledger account, which is the trade receivable for a specific customer. Then we'll have the trade receivable specifically for Hoop Close Corporation. Hoop Close Corporation. Then we say how much have we sold to this customer, and we say we sold to this customer inventory that is worth 5,000. So now this must be recorded in the specific account for that customer. That means the 5,000 must be recorded on the debit side of this account of the customer. It can happen that we by mistake record by error. Remember, this will also be sales. We can record by error an amount of 500 in the account of the customer. Please highlight this, guys, very important. In the account of the customer, we can make a mistake of recording the amount incorrectly by mistake. That becomes an error, and that is what we are busy doing in this question, correcting the errors. It is about the correction of error. So now in this case, we can make a mistake, and if we made a mistake in the account of the customer, that mistake will be corrected under the list of the customers, because this is the list of the accounts of the customers, because that will mean the total of 15,000 is recorded correct under the trade receivables control. So that means the trade receivables control, we don't need to make any correction if the total was transferred accurately, meaning if the 15,000 was transferred accurately as 15,000 on the debit side, that means we have recorded correctly regarding this transaction. But now we can, remember, I'm just using any mistake that can be done. Now we can say, okay, when we're transferring the 5,000, the accountant or the bookkeeper has made a mistake of recording 5,000. That means the correction must be done under the list of debtors, because the list of debtors is the one that will list all the debtors at Hoop Cross Corporation. So a correction must be made here. And again, we can make a mistake once again. I think I will have to record another video here which is more detailed in terms of the reconciliation and all the possible errors that can be discovered and that need to be corrected. Now, if this amount is incorrect, that means we have recorded the incorrect amount in the ledger account, being the trade receivables control. That means if we can by mistake here record 1,500, that means it must be recorded under the, it must be corrected under the trade receivables control ledger account. That means if they are telling us that we have recorded this amount incorrect, meaning the balance incorrect in the trade receivables control, then it must be corrected here. So now if that means it is correct, it is incorrect in the trade receivables, but it is recorded correct, all the figures in the list or the account of the debtor, meaning here's 5,000, then there's nothing to be corrected here if we transferred the right amount to where it belongs. Now again, it means there must again be another ledger account for another customer, which is Slot Ltd. So the Slot Stationaries, which is trade receivables. I normally forget to say this. It is trade receivables. trade receivables, slot stationaries. So this is the account for this specific customer, and we need to say how much did we sell to this customer. We sold inventory worth 10,000, and there the customer owes us 10,000. So now this 10,000 must be recorded on the increasing side of the account of the customer, because the more we sell on credit to the customer, the more the customer's account, meaning the asset being trade receivables, will be increasing. So now that means we'll have to record the 10,000 here as 10,000. And again, we can make a mistake here in terms of capturing this transaction, and maybe record 1,000 instead of 10,000. So now you can see that we can have this amount correct, transferred in the correct side as 15,000. Let us say it's correct, in this case 15,000, right? But the individual account of the customer, meaning slot stationaries, was recorded incorrect. We made a mistake of 1,000. That means in this case the correction will be done under the list of debtors. So I hope I made myself very clear. Now let me come again. Remember, this is trade receivables that is recorded where? In the sales journal, or that appears in the sales journal. That means whenever we sell anything on credit, it will be recorded under the trade receivables. But now we have another trade receivables that is appearing under our cash receipt journal. Why do we have another trade receivables in the cash receipt journal? It is because whenever this customer whom we previously sold inventory on credit, if one of the customers whom we sold inventory on credit is paying us back, that means we need to acknowledge that the money that we have received is for the payment of the account of the specific customer. So now that means we'll have to say, oh, we received money. How much have we received? We received, let us say, 2,500. We received from who? We received this money from Hoop Close Corporation. Oh, that means it is a Hoop Close Corporation is a debtor. So now we need to acknowledge that money that was received in our bank account, it was because of the trade receivable. So now that means the total of the trade receivables column that appears in the cash receipt journal is the one that must decrease our accounts receivables control on the credit side, because whenever the customer is paying his account, we expect to decrease his account on the credit side. So now that means the total of the trade receivables that appears in the cash receipt journal is recorded on the credit side of the trade receivables control, and also recorded on the credit side of the individual account. That means now we are going to say, okay, we received money in the bank 2.5 for what? For trade receivables. From who? From Hoop Close Corporation. That means in the ledger account for specifically Hoop Close Corporation, we need to say, thank you, boy, Hoop Close Corporation, for paying your debt of 2.5. So we are reducing the account of Hoop Close Corporation, while at the end of the day, the total of all the payments must reduce the total of all the accounts receivables on the credit side. So I hope I made myself very clear within this 18 minutes, trying to elaborate and for you to understand what this entails. Now when I move up and down, you'll really understand what does this reconciliation entails, and why I had to begin by explaining this background so that you can get the full picture. But I'll come back and refer you again to my scenario that I brought to you. Now we have a list of our debtors, and the list of our debtors, we are provided with a total of 13,897. So we need to begin with the list of debtors, which is a balance. And now our balance of the list of trade receivables, it is there. We have balance as per list. We start here and balance as per list, and you are provided with the amount of 13,000. It was 897. I hope my memory still serves me. 13,897. Yeah, that is correct. Now remember, you don't necessarily have to be provided with all this information. Please, I don't want you to be surprised when you see a different question. Sometimes this all information might not be given. You can only be given just the balance of the list of all the data before the corrections and the omissions were taken into consideration. So in this case, they gave us the list of the data, which is still not a transmesh. Then now we are reading the information below. Remember, the reason why I have to explain this once again, very important. Some of these amounts are incorrect. There are some corrections that need to be done, or there are some omissions that need to be accounted for. So now that is the purpose of the reconciliation, to say, okay, this amount was recorded on this side but not on this side. This amount was recorded correct on this side but incorrect on this side. So that is our main focus of the reconciliation. Then it says on the 30th of April, end of the month of April. And again, remember now, whenever we do reconciliation, the balances must be on the same date. In this case, this is the list of trade receivables on the 30th of April. And this transaction is also on the 30th of April. And what are we given? We are given the trade receivables control preliminary balance of 15,123. So now we have 15,123 on the debit side, 15,123. This is the balance in our trade receivables control. Balance brought it down. And we can see that this amount is not the same as this amount. And we know that that amount, remember, it is this amount, the amount of 15,000. This amount should be the same as the 15,000 on the debit side, as I showed you previously. So we can see that there is no balance in this case. Therefore, now that is what we are to be busy with and reconciling, so that everything is balancing at the end of the period, or end of all the transactions that would have corrected our errors and omissions. Now we proceed on that same note. We read now the second or the first adjustment. We have the balance now of the trade receivables control, and we have the balance of the list of trade receivables. So from there now we can start reading the transactions and making the necessary adjustments. Number 3 says, after an investigation of the individual accounts, remember these are the individual accounts, source documents, meaning slips, the evidence of payments, evidence of sales, and other relevant information. The following errors and omissions were identified. So there are errors or omissions that were identified, and those are the ones that we are busy to correct now. The total of the trade receivables column in the sales journal, I want to highlight that the total of the trade receivable column, it says trade receivable column in the sales journal. So now I think you understand why I did what I did. They say the column in the trade receivables in the trade receivable, which is this column, the column of trade receivable in the sales journal. Take note, in the sales, let me verify if it says in the sales journal. In the sales journal was undercasted. They say the total, not the amount of the data, the total. In other words, they are saying the amount that is here at the bottom, which is this total, the one that was transferred, that was supposed to be transferred on the debit side, not as an opening balance, but as just as a transaction. The amount that was supposed to be transferred here was undercasted, meaning it was less than it was supposed to be. And I hope we are very, very, very clear with that. So now that means it is telling us very clearly that the debit side of the trade receivables control is less than it is supposed to be. Remember the word undercasted, meaning less than it was supposed to be. So now that means our sales were undercasted. So now that means if this side is undercasted, let me just go again. That means if this balance is underestimated, in other words, that means obviously what we transfer here will be underestimated, because we transferred the incorrect amount to the correct side. So now it means this side is undercasted, or meaning underestimated. Then we say sales undercasted. casted, you write the full wording. By how much? How much was it underestimated? It was underestimated by 350. So now that means we need to increase this side of 350. And please be mindful of the fact that we are not doing sales journal, but we need to know, where did this error happen? Where was it supposed to be recorded? This error was coming from this column, trade receivables column, and they are saying the total. Where does the total of the sales receivables column supposed to go? Is supposed to go to the debit side. So if this total is undercasted or underestimated, that means the debit side of the trade receivables control is underestimated. Remember, they are not referring to the individual account. They did not tell us about the name of the account of the customer. No, they are talking about the total amount of the trade receivables control column under the sales journal. Now, we have dealt with that and recorded it on the correct side. So now we go to the next one. The next one is number 3.2. Number 3.2 says the account of who? Of Hoop Close Corporation. The minute they tell you the name of the customer, that means the correction must be done under the list of debtors, because under the list of debtors, that is when now we have the names of the account customers, meaning these are the names of the debtor that we have. So now the minute they say the account of who? Hoop Close Corporation, we are focusing now where? Under our list of debtors. That is very likely the error to be corrected there, unless information state otherwise. It was correct. It was incorrectly balanced. Let me read that. The account of Hoop Close Corporation was incorrectly balanced. That means the balance of the account of Hoop Close Corporation is incorrect. Let us see now what made it to be incorrect. Who has done something wrong? It says the amount should be how much? Oh, 9,734. That means how much did we record? We recorded 10,000. How much was supposed to be? It was supposed to be, or it should have been 9,000. That means this amount is more than it's supposed to be. We're supposed to reduce it by a certain amount so that it becomes 9,734. Now let us check how much are we supposed to reduce it by. So now that means we go and we say 10,283 minus 9,734. So it means this account is supposed to be reduced by 549 so that it becomes 9,000, because it should have been 9,734, not 10,000. So now we need to go there and we reduce. Remember, we have taken the balance at the bottom. The balance includes 10,000. So what we need is just to say minus 549 in order for us to correct only that entry, which is entry number 3.2. So now let us go there and we need to specify who are we correcting. We need to say Hoop Close Corporation, Hoop CC. Then that, why are we doing this? Because it was incorrect balance. They told us that it was incorrect balancing. So now this is incorrect balancing. Then we say 10,000. It was 10,000. How much? 10,283 minus 9,734. It is 10,283 minus 9,734. And we said that it must be minus by 549. So that is already a tick that goes to your marks already. Now remember, it was only the account of that customer, and if that is the account, remember the trade receivable control column is not affected. They said nothing about it, that. So that means it's only the account of the customer as they specify that was incorrectly balanced. We go to now number 3.3. Number 3.3 says the total, take note again, the total of the column, we are referring to the column for trade receivables in the sales journal. Let us go to the sales journal. Which total are they referring to? Definitely you know that it is the 15,000 that we're referring to. They are referring to the total. that is in the sales journal. Sales journal was 6,890. Now let us read again. The total of the column for trade receivables, for the column of trade receivables in the sales journal, that means exactly this column of trade receivables in the sales journal. What are they saying about this column? They are telling us that this column was 6,890. The amount was posted to the trade receivables control. Take note, it was posted where? To the trade receivables control account as how much? As 8,980. That means the amount that appears in our trade receivables control is overestimated, is overcasted by how much? We need to go there and correct the error. That means, in other words, now we took the 15,000. Remember, I'm just using my own words, my own numbers. That means this amount of 15,000 was incorrectly recorded, which now is 15,000, right? We transferred it on the right side, but maybe we said 17,000. That's what we have done. Instead of taking the right amount of 15,000, we recorded the incorrect amount, which is more. What is very important, the fact that the amount is recorded on the right side. I think I should be recording a video on that, understanding if the entry was in the right side first. That's very important to identify. Is it on the right side? Now the amount is on the right side. They did not say it was on the wrong side. The amount is on the right side, but it's more than it was supposed to be. That means we have more debtors than we're supposed to have. So the difference between 15,000 and 17,000 must be decreased on the credit side. So the difference must be on this side, so that we can decrease this amount on the credit side. Why are we doing that? Because the credit side of the trade receivables is the decreasing side, and the debit side is the increasing side. So whenever we want to decrease an amount that is on the debit side, we need to decrease it on the credit side. And whenever we want to increase an amount that is on the debit side, we need to increase it on the debit side. So that means the difference between the amount recorded and the amount that was supposed to be recorded is to be corrected on the credit side. So now let us look at this amount in terms of the difference. How much is the amount are we supposed to be correcting in here? So now let us go to these two different figures. The amount that was recorded, we recorded an amount of 8,000. We recorded 8,960 instead of recording how much? Instead of recording 6,809. You can see these numbers sound the same. So now we need to decrease our trade receivables control, and they said, I want to highlight again, they said the total column of the trade receivables in the sales journal. So they are referring to the total, and whenever the total is affected, your trade receivables control are very likely to be adjusted. So now we need to say this was a posting error, and this posting error will be recorded as sales, because under our sales journal we are selling inventory on credit. So in brackets there you say posting error, because this was a posting error. We posted by error on the wrong side. How much is to be recorded under the posting error? It is 2,070 rands. Remember, I want to highlight this again. Remember, on the debit side, guys, how much do we have? On the debit side, we have the incorrect amount. We have the incorrect amount of 8,960. That is what has been captured. Included here, there is an amount of 8,960. There's an amount of 8,960 that is here. It's 8,960 that is included in this 15,000 of the opening balance. So now the minute we record an amount on the credit side, automatically it decreases that 15,000, which include 8,960, so that 8,960 becomes the correct amount of 6,890. And I hope I'm making myself very clear here, ladies and gentlemen. Now let us proceed on that same note. We go to 3.4, at least moving a bit quicker than I anticipated. Number 3.4. It says credit note. Now, what is credit note? A credit note is a document that is sent to a customer after the customer has returned inventory back to the business because he is probably not satisfied with the quality and he wants to return the inventory completely, all of it, back to the business. So the minute the customer returns inventory that is worth 45 rand in this case, the account of the customer supposed to be decreased by the amount or the value of the inventory that he has returned. So now this is a credit note is when inventory is returned back to us. Either we have delivered the wrong inventory, or either the inventory is not of good quality, or the customer is thus not satisfied with the inventory for whatever reason it could be. So the customer returns the inventory back to us. And we know that when the customer is returning the inventory, his account must be decreased by the value of the inventory that he has returned. Now it says credit note number, the number is given to us there for how much? For 45 rand. To who? To Damat Cleaners. That means Damat Cleaners returned inventory back to us, and the value of the inventory that he returned is 45 rand. And we expect that his account must decrease by the amount of the inventory that he returned, which is 45 rand. It says it was entered in the sales return journal, but not posted to the account of Damat Trader. That means now it must be corrected in under our account, meaning the list of debtors, the account of the customer. Now it was not recorded in the account of the customer, and the account of the customer, which is Damat Traders, appears in the list of the debtors. So now meaning under our list of debtors in the account of Damat Traders, in other words, in simple terms, as I explained before, in the ledger account, if this was ledger account for Damat Traders, the 45 rand would have not been recorded on the credit side if this was the ledger account for Damat Traders, to be specific, because in the account of Damat Traders we're supposed to decrease this by 45 rand, and this 45 rand affect the list of debtors negatively. Now remember, I'm using ledger account in this case and the list of debtors because ledger account is the same as the list of debtors. Then now, in other words, we are saying in the account of Damat Traders, we need to write this and say Damat Traders, Damat or Damat Traders, or Damat Traders. And this was a credit note number SD2653, not posted or not recorded. This was the credit note not posted. How much was it? 45 rand. Remember, the amount that or the total or the list or the balance of this account of the debtor, meaning Damat Traders, being 596, this amount is already included in here. So what we do here, we just say minus 45 rand because the account of Damat Traders of 596 is included here. We just need to decrease it by the value of the inventory the customer returned back to us. Then we are very clear. One thing that I did not write when it comes to our journal, it is what we call the sales return journal. Sales return journal is the same columns as the sales journal. It is exactly the same column as sales journal, and the only thing that we record in the sales return journal is only a return. So there is also the same column as trade receivables. And in some institutions they don't have this account, this journal separately. Whenever the customer return, they'll just record all the amounts in the same sales journal, but they record them negative. So hence sometimes I will not highlight sales return journal. But a sales return journal is when we are doing the reversal of what we have done because the customer has reversed or returned the transaction. So it's exactly the same columns, but the total of the sales return journal under the trade receivables column will be recorded on the credit side of the trade receivables control. Now, yeah, let me then go to the next transaction. Next transaction indicate, okay, let me just go further to what I've said. That means in our sales return journal, the total of the trade receivables will be recorded on this side. Whatever is under our sales return journal will be recorded here. That will be indicating that the customer has returned. So the total of the amount that was returned must be decreasing our trade receivables. Then now we go to the next transaction, 3.5. 3.5 says the account, and please take note of this. They say the account. The minute they say the account, they refer to the customer. The account. Now, and again, they said not posted on the account. They are referring to the list of debtors. I want to show you something else. The account. They are referring to the account of the specific customer. That means the correction will be made in the list of debtors. Then now, it does not mean if there's an account, you'll always go to the list of debtors. They might say it was recorded correct in the account of the customer, but not correct in the trade receivables control. So it does not mean if there's an account, you're like, oh, okay, then it goes straight to the list of debtors. No, but I'm just highlighting that now it is speaking about the list of data. Maybe it is correct in the list of the data or that specific data or account of the customer, but incorrect when it was transferred into the trade receivables control ledger account. Now 3.5 says the account of the data slot stationaries should be written off. This is a bad debt. The minute the account is being written off, meaning the customer has been not paying the account, and they have tried to call the customer, and whenever the customer saw the private number, he will just not pick up his call. For a long time, emails were sent, letters were sent, and the customer is nowhere to be found. Therefore, now his account must be written off. And it says all entries must be made. That means none of them were made. That means the list of debtors will be affected, and also the trade receivables control must be also recorded or be affected. So now in this case, we must make it very clear that we are writing here credit loss, and the credit loss will be 200. How much is this customer owing us? This customer is owing us 237. That is slot stationaries. Is it slot? Yes, slot stationaries owing us 237. So now we need to write, remember, if the customer is a bad debt, meaning we are writing his account off. Remember, this is the amount of 237 is included here. The customer slot stationaries is owing us an amount of 237 and is included there. If now he's declared insolvent, meaning it must be written off a bad debt, meaning he will never pay us again. So we need to remove this from being a debtor, and we remove and we cancel it out. We're minusing it out because the customer is a bad debt, 237 rand. He will not pay us again. So now we also need to do the same thing in the list of debtors, because they said it must be recorded everywhere. We have slot stationaries. Slot stationaries written off. The account of this customer must be written off, an amount of 237. Remember, this 237 is included there, and we need to remove it because we are told to write off this account as a bad debt or a credit loss. Then now we go to the next transaction. Next transaction, and please guys take note, they say all. They could have said maybe it was recorded in the list of, in the account of the customer. They might have said that, but not in the trade receivables. They might say it was recorded correct in the trade receivables, but not in the account of the customer. So it can be any way that the examiner wants to assess you at that specific point in time of the exam. Now 3.6, only 3 questions that are left, or adjustment that are left. a check of 1,850 was received from who? Emily Suppliers in full settlement of her account. Immediately when this was received, what have we done? I want to stop in that comma because this is very important. Was likely to be a check that is returned from the bank. A check of 1,850 was received from Emily Suppliers in full settlement of her account, meaning Emily Suppliers was paying his full account. Which, how much was he owing us? He was owing us an amount of 1,980. Why is he settling the account yet is paying less than what he owes us? That means there must have been a discount that this customer was given. That is why he is circling the account, because when you circle the account, you're paying it off. So now if he's circling the account but is paying less than what he owes, that means he must have been given definitely a discount. So now in other words, we need to strike the amount of the discount that he was given. He must have been given a discount of 1,980 minus 1,850, meaning the discount of this customer is an amount of 130. So the customer was given a discount of 130, and we received a check from this customer in full settlement of the account. What have we done immediately when we receive this? When we receive a check from a customer, before we go to the bank, what do? We will then record it on the site. We record the 130. Then after we have recorded the 130, we will say, okay, what else needs to be done? We say discount. Then after we say bank, the money that we have received, which is 1,850. The total of the two must be equal to the amount that he was owing us. Because was owing was 1,810, 1,810 and how much? 1,810 or 980. He was owing us 1,980. So now we need to make sure that the sum of the two will give us that 1,980. So now we must separate the cash that was received from the discount, but the total of the account of the customer must be recorded. So this is what should have been done when the customer is settling his account. Then at the same time, under the list of debtors, we would have said again an amount of 130 reduce, which is a discount. Then after we say bank, then after we say 1,850 separately, but the sum of the two is equal to the 1,980, but we have to separate the two because discount was not cash received, but 1,850 it is cash that was received. So now this is what we would have done when money was received, or this is what we have done when cash was received. At the point of the receipt of cash, this is what the transaction would have been recorded. So we received 1,850 in full settlement of the account, and we had a paper called a check from this customer, and it says it was or was incorrectly analyzed as sales in the cash receipt journal. Now something happens. This was supposed to be indicated as a payment by customer, but we recorded it as it was incorrectly analyzed as sales in the cash receipt journal. So that means we thought that we received money for cash sales. We did not acknowledge or record this as cash that was received in the payment of the account of the customer. Now, what does that mean? Let me just go to the journals again, hence the importance of understanding the journals. In the cash receipt journal, what have we done? We would have said in the cash receipt journal bank or cash, because we recorded this as cash receipt journal. We would have said cash, and we record 1,850. I don't know how much was recorded as cost of sales. We would have recorded nothing here. Remember why? Because it was not a payment by a customer. So that means our trade receivables were not affected, meaning we did not indicate that the customer has paid us, because it was treated as a cash receipt journal, as a cash sales transaction. So if it's cash sales transaction, let us just verify that it was indicated as analyzed as cash in say in cash receipt journal. It was analyzed as sales in the cash receipt journal. So if we are selling for cash, and because in the cash receipt journal we only sell for cash and receive cash from the customer who previously owes us. So if we acknowledge that as a sale in the cash receipt journal, meaning it's a cash sale, that means again our trade receivables were not affected. VAT, then something was recorded under VAT, whatever amount of VAT was, then after we would have recorded the amount that we received, 1,850 was received, then our bank will be affected. So this is what we have done. So now, if this is what we have done, it means our trade receivables were not affected, or nothing was recorded. That means our trade receivables control, nothing was recorded. That means again, under our list of debtors, nothing was recorded. Why am I saying nothing was recorded? Because we treated this as a cash sale, and cash sale does not affect trade receivables. Trade receivables only is affected when money is received from a customer who was paying his account, and that transaction was treated as a money or an amount received from that customer. In this case, this transaction was not treated as an amount received from a customer. So that means we did not even specify the name of the customer to say, okay, we received money from Slot Stationaries. If this was a slot, not Slot Stationaries, this was who? Emily Suppliers. So there was no mentioning of Emily Suppliers here and say Emily Suppliers. So that means both the list of trade receivables and also the trade receivables control, nothing was recorded. I hope, guys, I'm making myself very clear when it comes to this explanation. Now we need to record this in both the trade receivables control and also the list of trade receivables that we have. Then now let us start on the credit side. I've already shown you the amount of that was to be recorded. So in this case it will be sales. Why do we say sales? Because this was treated as sales in the cash receipt journal, yet this was not sales, remember. So now when we're correcting this transaction, we need to cancel it from sales and we transfer it to trade receivables control. So hence now we're saying sales because sales are decreasing on the debit side, and if sales are credited, that means under the sales ledger account, this amount will go on the debit side. We are reducing our sales because there was no amount of sales, there was no sale that we made. So in other words, our sales are overstated. They are more by 1,850, which is not supposed to be. So now that is why we say sales and we say analysis error. You just take from the same information, analysis error, because we analyze here incorrectly by error. Then after we say now settlement discount, we need to acknowledge the settlement discount. Remember, this customer was settling his account, and as he was settling his account, he was given a discount of 130, and his account amount that he was paying was 1,980 that he was paying. So now we have to separate the discount and from the cash that we received, which was incorrectly or by mistakenly recorded in the cash receipt journal as sales. So we are cancelling the sales and acknowledging that this is a trade receivables control item. Then we do the same thing, we copy that and we paste it and we say Emily Suppliers. Emily Suppliers. And under Emily Suppliers, we have the incorrect analysis, which is sales incorrect analysis. Sales incorrect analysis, which is 1,850. Remember, the account of the customer must decrease because he has paid us. Now, because he paid 1,850, it does not mean that we must only record that 1,850. here we must also acknowledge the discount of 130. Remember guys, if we don't decrease the account of the customer by the discount, the customer will owe us the discount. So we need to reduce the account of the customer by the discount that we have given him, so that he doesn't owe us the discount that we said he must not pay. So that is the reason why we're also recording the discount here. Remember, we don't have the signs in the ledger account. The fact that the 130 and 1,850 is on the credit side is an indication that we are decreasing our customers because one of the customers has paid us. So you don't write signs meaning negative or positive in the ledger account. You only write the sign in the note or in the list of debtors in this case. So now we need to reduce the account of the customer by also the discount that we have granted to him. So now we have Emily suppliers. This will be settlement discount granted. Settlement discount granted 130. Now we have recorded all that was supposed to be recorded here. Now remember, once again, the customer settled his account. The total of this must be equal to the amount that he was settling. The discount plus cash must be equal to the amount that he was settling. 130 plus 1,850 will give us 1,980. How much was this customer owing us? He was owing us exactly the same amount of 1,980, and he settled the account. So we have decreased his account by 1,980, of which part of that was cash and part of that was a discount, and the customer is owing us no more. Then we go now to number 3.7, one transaction left before 1 hour is gone. Interest of 150 was charged on the account of Emily suppliers during the year. Entries were only made in the trade receivables ledger, and I love this one because now it comes back to what I've been doing. In the trade receivables ledger of who? Of Emily suppliers. It does not say trade receivables control. The minute it says in the trade receivables ledger, in other words, what are they saying? They are saying the entry was only made in the trade receivables ledger for Emily suppliers, in the ledger account for Emily suppliers. That means this is where this was done. Trade receivables ledger for who? For Emily suppliers. Is it Emily suppliers in fact? Yes, it is Emily suppliers. So the entry was recorded only in the trade receivables ledger for Emily suppliers. I'm just adding that for Emily suppliers because that's what it means. Now the interest was charged. Whenever we're charging interest to the customer, then it means we are saying you are owing us more. We are adding the interest on the amount that you owe us, and we know that whenever you buy clothes in any company or buy anything on credit, they normally will have administration fee or interest that is added, so that what you pay is not exactly the same as the cost or the value of the goods that you would have incurred when you paid for cash, or you'd have been if it was for cash. So there will be interest that the company will take because you have taken inventory and we are using that inventory, yet you have not paid them. So now that means on this side we're supposed to have recorded 150, and we say here interest expense. Sorry, not interest expense, interest income. Now I'm saying it from the different viewpoint. Now this was recorded here as interest. Then now it was recorded very well in the Emily suppliers. Remember, this amount that come from the ledger account of the account of the customer will be recorded in the list of debtors under the account of the customer. Where will that be recorded? This will be recorded under our list, meaning the 150 is already included or is already accounted there under the account of Emily suppliers. Let me just verify if this is really Emily suppliers. Yes. So this would have already been accounted for in our list of debtors when it comes to Emily suppliers. So now that means is already accounted in our total list of debtors of 13,897. So it's already included here because it was recorded correctly in the account of the customer and would have been transferred correctly in the list of debtors unless it was stated otherwise. So now it was recorded very well in the entries were only made in the trade receivables ledger. Then that means the 150 must still be recorded where in the control account, trade receivables control account. That must always be specified sometimes. So now we only have to account for this on the debit side of the control account, which is interest income, 150 rands. So that one has been accounted for. Then we go to the last transaction. The last transaction says that a check of 250. Now there's another check. Maybe this check will be the one that is returned by the bank. A check of 250 received from who? Field Design. And again, remember in the previous question they talk about the check and there was a comma there, and I stopped at that comma and I said, what are we supposed to do with this check when we receive it in settlement? And I record it. And after we identified later on, it was not recorded in the way it was supposed to be recorded. It was analyzed by error and was recorded in the sales, as sales in the cash receipt journal. So we corrected it very well. And we said, oh, our sales were increased more than they're supposed to have been because this transaction was not sales. So when we corrected that in the trade receivables control, our contra entry was sales. We are removing it from sales, acknowledging it as our trade receivables control. I want to highlight the commonality between these two transactions. Now again, in this case, they say a check of 250 was received from who? From Field Design. Now immediately when the check is received, what do? We go to our books and we say, who is Field Design? Field Design, first of all, is one of our customers. So we received a check from Field Design. How much was Field Design owing us? Field Design is owing us 805. So immediately when Field Design pays 250, it was supposed to be negative 250, and we have recorded this as 250, unless when you read further it would have said so. But this is what we would have done, minus 250. Then after we're supposed to say the 250 must come on the side. Why so? Because we received money from this customer. So we need to record this here as bank, indicating that money was received. Then after under list of debtors, we say minus 250. But in this case, we don't have to record here because I've done it already in the list of debtors. So now in this case, we would have done that immediately when the check was received. And this is what we're supposed to have done when check is received from the customer in payment of his account. Now let's read further. It says, a check of 250 received from Field Design was returned by the bank, marked what? RD. Relevant entries must still be made in the trade receivables ledger. All other entries were done correctly. So now, in other words, we are saying when the check was received, I want to highlight, when the check was received, we have recorded the 250. I want to highlight that. We recorded 250 here and we said bank. Then we said, oh, the customer has paid us. Then we said 250 here minus. Then we would have specified the name of the customer, which is Field Design. We said this is what we have done, Field Design, check payment. However you write it, this is what we have done in the beginning. Now, when we went to the bank to say, bank, please give us 250 in the account of Field Design, he gave us a check, a paper, and he is saying that we must take 250 in his account. Then the bank says, no, there is no money in the account of Field Design. Then the bank returned the check, return RD, meaning refer to drawer, meaning there is insufficient fund in the account of this customer. But we have already recorded that we received money in our books already, because a check is money, just waiting for the real cash from the bank. Then, and we have already reduced our trade receivables. So now what do? Let's listen again to the transaction. The transaction says, relevant entries must be made in the trade receivables ledger. We know that trade receivables ledger is a list of debtors. Know that one now. It's a list of debtors. Whenever they speak of trade receivables ledger, that is a list of debtors. And again, there was trade receivables ledger. This is a list of debtors. They are referring to a list of debtors. So now that means they say relevant entries were made in the list of debtors. Or sorry, say relevant entries must still be made in the trade receivables ledger. That means relevant entries must still be made in the list of debtors. That in other words, this transaction was not recorded in the list of debtors. All other transactional entries were done correctly. When they say all other transactions, our focus is one. That means the trade receivables control was recorded correctly. That means, in other words, they have already said to this transaction, oh, we must do a reversal. They have already said here 250. And they have already said bank. So we don't have to record this too, because it has already been done. It was recorded and it was cancelled. So we don't have to redo this. They say it was already reversed. So because it was already reversed, but it was not reversed in our list of debtors, then we need to say Field Design, please, we need to bring back. Remember, we didn't have to record this one, guys. It was already recorded. This one, I was just showing you what we should have done. So now, what do? We say field, or let me just not erase it, so that I can explain this very important thing, because I'm seeing something that requires correction, or requires explanation now. Now we are doing a code. Remember, this is out, but I want us to cross it. In other words, now we are saying Field Design. Field Design. Field Design, we have a check that is written RD. RD check. How much? 250. Now we are recording 250 as positive amount. Why are we recording as positive? Because when we received money in the form of the check from this customer, we acknowledge it as negative, reducing his account. But now when we went to the bank, there is no money. So now we have to reverse that so that it becomes zero, meaning this customer has not paid us. So when we say 250 positive, we are saying positive 250 minus the 250 that we have recorded previously as negative. Therefore, now it becomes zero in terms of the payment from this customer. That is why this must be positive. I want to highlight that, because previously it was recorded as negative when the check was received. It was negative. Why? We were acknowledging that this customer is paying his account. So now I just want to erase because I have limited space. In other words, now we are now recording Field Design, the reversal. Field Design, and we are saying RD check. How much? 250. Remember, the 250, which is negative, was already deducted here a long time ago. When the check was received, this was recorded already long time ago, meaning when we were taking the total of the list of debtors, which is the total of the list of debtors, this total of 13,897, we have already deducted 250 because the check was received. And we discovered later on, after the end of the month, that no, the customer who paid us 250 and who made us to reduce his account, we were not supposed to reduce his account by that amount. So now we need to add back the 250 so that the account of the customer will go back to the same amount that he was owing us before he gave us the check, yet there was insufficient funds in his account. So with this, guys, I have tried as much as I can to explain. Now all that we need to do is just to balance our two accounts and see if do they really come to a balance and a reconciliation. We have 13,897 minus 549 minus 45 rand minus 237 minus 1,850 minus 130 plus 250. We get 11,336. Then we come to our ledger account, and we know that there will have to be a balance brought down and a balance carried down. So our balance brought down and balance carried down will have to be the same 11,336. 15,123 plus 350 plus 150. It will give us 15,623, which is the total of the bigger side. 15,623 623 minus 2,070, credit side minus 237, credit side minus 1,850, credit side minus 130, minus 130. We get balance carried down of 11,336. This is our balance carried down. Then our balance brought down is 11,336. This is our balance brought down. And if these balances are the same, then I will be very happy. And you can see that our balances are exactly the same, 11,136, and this exactly the same as 11,136. And in this question, 1 hour 12 minutes, you have grabbed a total of 19 marks on the box. If the paper is out of 100, you already have 19%. With that, guys, you've been lovely audience. God be with you. Study very hard. Get 100% in every question in order for you to get 100% in the entire question paper. This subject is very easy. It's just the view in which you see it. Everything is easy in the eyes of the Lord. Thank you.